All right, let's talk about Bitcoin. Today, we're diving into one crypto analyst case for why a major upswing could be right around the corner. After weeks of the price going nowhere, he's arguing that a powerful mix of geopolitical events, institutional moves, and key technical signals have all just flipped green.
So, is a huge crypto bull run really about to kick off? Well, the source material for this explainer starts with that very bold claim. He says that even though the market has felt, stuck behind the scenes, Bitcoin is actually showing some real strength and moving in the right direction again. So what's behind all this optimism?
We're going to unpack all the evidence he's putting on the table, piece by piece. We'll look at the specific data, the charts, and the global events that he believes are forming the foundation for a very bullish outlook.
So here's our game plan. We're going to start with a pretty surprising geopolitical theory, then jump into the wave of institutional money, follow the digital footprints on the blockchain, look at the technical signals, and wrap up with the analyst's playbook for investors. Okay, so the first part of this argument is a real curveball. He's pointing to a major geopolitical event in Venezuela as a potential and maybe overlooked catalyst for the entire crypto market.
The whole theory really hinges on this number, 600,000. That's how much Bitcoin the analyst claims the nation of Venezuela is holding at its treasury. And he's connecting this massive stash to recent political shifts in the country, which raises a huge question. Who's in control of all that digital wealth now?
And according to the source, we're not just talking about crypto here. Venezuela is a powerhouse of resources. We're talking the biggest oil reserves in the world and tons of gold. He frames this alleged 600,000 Bitcoin holding as just another critical national asset, which would make the country's political future incredibly relevant to the crypto space.
So here's the kicker. The analyst speculates that Venezuela might have been a constant seller in the market, to fund its government. He suggests that if there's a change in leadership, that massive selling pressure could just stop. And that could fundamentally change the entire supply and demand picture for Bitcoin, overnight. All right, let's move on to the second big argument, which is all about the big money that's supposedly flooding into crypto. The source is saying that major financial institutions are definitely not sitting on the sidelines anymore.
And he gives him pretty specific examples. You've got Bank of America giving the green light for Bitcoin to its wealth clients. You have PwC, a massive accounting firm now offering crypto services. And then there are corporate players like MicroStrategy and Japan's Metaplanet just continuing to stack more and more Bitcoin on their balance sheets. The argument is that these moves create legitimate, well-paved roads for mainstream money to pour in.
Okay, so moving beyond the headlines, the analyst then digs into the on-chain data. This is info pulled straight from the blockchain, and it shows us what investors are actually doing with their Bitcoin. And the first big takeaway here is about the market's heaviest hitters, the so-called whales. The analyst claims that even with a 30% price drop, these huge holders have been buying, not selling. He sees their behavior as a massive vote of confidence in where things are headed. And this chart really tells that story. The source shows data suggesting that whale holdings have been shooting up, and, in his words, astronomically. He thinks this is basically the smart money using the lower prices to load up their bags before the next potential surge.
The second on-chain signal is all about supply. The analyst points out that the amount of Bitcoin just sitting on exchanges is at a multi-year low, and it keeps dropping. This is seen as a super bullish sign. It suggests investors are moving their crypto into cold storage because they plan to hold on for the long haul, not sell anytime soon.
So on top of all that, the analyst starts layering on some technical analysis. He's claiming that several key chart patterns, ones that have historically been pretty darn good at predicting price moves, have all just turned bullish at the same time.
And he's zeroing in on these three signals specifically. He notes that when momentum indicators like the LMACD and the MACD crossover flip to the upside, or when a golden cross appears on the chart, it has historically come right before a major price run. So based on that history, he's saying that charts are screaming that a reversal is happening right now.
And finally, the source shifts gears from market data to something just as critical, market psychology. He lays out a playbook for investors by showing the difference between two totally different mindsets for handling the wild rides of the crypto market.
And this is a huge point he makes, the difference between a reactive mindset and a proactive one. He talks about how so many investors panic and sell when things go down, only to get FOMO and buy back in when the price is much higher. In contrast, he says, the seasoned investors see these dips as buying opportunities to dollar-cost average because they get that these cycles are just part of the game.
And this quote from the analyst really sums up his advice. I mean, it's the most basic rule of investing, right? Buy low, sell high.
but he believes so many people get it backwards when things get stressful. He basically says that if you believe Bitcoin isn't going to zero, then you can zoom out, adopt a long-term view, and act rationally.
So when you put it all together, the geopolitics, the institutional money, the on-chain data, and the technical charts, the analyst builds a pretty comprehensive case for a bull run. But the question is, are these signals really a major turning point for the market, or is this just another wave of hopeful speculation in what we all know is a crazy, volatile space? Well, that's the billion-dollar question we're left with.